In Ethereum, I think the moment is really this year, because this is the year that Wall Street and governmental regulations became friendly to think about rebuilding on the blockchain. And part one, of course, was the stablecoins, and stablecoins have really been the breakout hit in crypto. We coined it as the ChatGPT moment for crypto because it has become a breakout product. I think that there is a lot of there to Ethereum being the base where Wall Street is going to build a lot of the future. I think Ethereum can reach 60,000 per token in that world, and that would proportionally benefit the DATs because Ethereum's around 4,500 today, so a 15 times increase plus the NAV expansion. So there would be a lot of upside in the existing Ethereum treasury stocks in that world, and many would become multiple hundreds of billions of dollars in market cap.
Ethereum is setting up for its most powerful run yet. With Wall Street warming to blockchain, Ethereum is projected to reach $60,000 per coin, a 15x increase that could reshape the entire crypto market. That's the latest insight from Tom Lee, co-founder of Fundstrat Global Advisors and chairman of BitMine Immersion Technologies. In a discussion with Cathie Wood, CEO of Ark Invest, Tom Lee explained that 2025 could be the year traditional finance begins migrating onto blockchain, with Ethereum at the center. He sees its value climbing to $60,000 as trillions in capital flow through the network. Cathie Wood agrees that the transition is accelerating but emphasizes that Bitcoin remains the lasting store of value, while Ethereum drives the digital infrastructure being built around it. Stick around until the end of the video, where Tom Lee and Cathie would break down how 2025 could mark the biggest shift yet for both Bitcoin and Ethereum.
Hey, I am Maria with DailyDoseCrypto. Have you noticed that gold, silver, and Bitcoin have hit all-time highs recently? Is this a coincidence, or are smart investors onto something? The dollar is depreciating, inflation is eating up all of our cash, and the US national debt is through the roof, hitting new highs every day. That's why people are shifting to alternative assets like gold, silver, and Bitcoin. We at DailyDoseCrypto have partnered with ITrust Capital, your one-stop platform to buy and securely store 80+ digital assets, including Bitcoin, gold, and silver to hedge your future against debasement. With over 200,000 accounts, 15 billion in transactions, and 11,000 plus positive reviews, they're helping real investors build long-term wealth with their tax advantage, IRA, and PCA, which is a premium custody account that supports the highest level of custody and security in the space. They do this all with institutional-grade custody through partners like Fidelity Digital, Fireblocks, and Coinbase Prime, keeping your assets secure while you can trade 24/7. Fees are just 1% per transactions with no monthly or annual costs. Getting started is simple. Sign up for free and fund an IRA or PCA today. You'll receive a $100 bonus and start growing your assets the smart way. Click the link below to open your account now and begin your journey toward generational wealth.
Overstock was probably the only way someone could buy Bitcoin in the past. And then MicroStrategy came along. So MicroStrategy is almost 2.0 as Bitcoin treasury. What he's done successfully, of course, is really to upscale it so rapidly, because he went from having $2 of Bitcoin per share to over $250 per Bitcoin share, per MicroStrategy share today. So he has created enormous shareholder returns because the security business, of course, has continued to really muddle along at basically zero growth. In Ethereum, I think the moment is really this year, because this is the year that Wall Street and governmental regulations became friendly to think about rebuilding on the blockchain. And part one, of course, was the stablecoins, and stablecoins have really been the breakout hit in crypto. We coined it as the ChatGPT moment for crypto because it has become a breakout product, and it has created two enormous companies. One being Circle, which I know Ark was an anchor investor in the IPO, and the other is Tether. Tether today is raising money at a $500 billion valuation and roughly 300 employees. That's about $1.7 billion of market value per employee.
Now, Bitcoin is at about, 2.4 trillion now, somewhere around there. And Ethereum is 540 billion. You think there is a flippening, as they might say. I'd love to hear you talk about it, but just to set this up, anyone who's listening to this podcast knows that we have in 2030 a forecast of the entire crypto asset ecosystem. And of course, we're going to be modifying this with time. We're doing our big ideas work now. But as of our last go at this, the ecosystem we expect to hit $25 trillion in 2030. The vast majority of that in Bitcoin, mostly because we look at Bitcoin as a global monetary system, rules-based that we've been missing since the U.S. went off the gold exchange standard in 1971. That's a very big idea. It's a technology, obviously, and it is the first of its kind. And we wrote a paper in 2016 on this, first of its kind in a new asset class. So those are three very big ideas. I'd love to hear your thoughts on why ETH, or the ecosystem, will surpass Bitcoin.
Okay. Well, if I could rewind a little bit to 1971, in our chairman's message last month, we addressed how gold versus Wall Street grew post 1971. So 1971 was when Nixon formally withdrew the U.S. from the gold standard. The immediate beneficiary was there was demand and a market to own gold. And so people would say that was your, first implication. But what we wrote about and talked about in our message was that in 1971, the dollar became fully synthetic because it was no longer backed by anything. And so there was risk that the world would go off the dollar standard. So in stepped Wall Street to create products to propagate the future of Wall Street, including, and we listed, I think, 14 products that emerged over the next decade, from money market funds to credit to mortgage-backed securities to futures, etc. And dollar dominance by the end of that period went from 27% of GDP terms, but to 57% of central bank reserves and 80% of financial transaction quotes. So Wall Street created products that made the dollar dominant, and the market cap of equities today is 40 trillion compared to 2 trillion for gold. So in other words, gold is 5% of all available assets. And so in 2025, we think everything is now becoming synthetic or tokenized, not synthetic. So as we move not just dollars onto the blockchain, which is stablecoins, but we'll move stocks and real estate, dollar dominance is going to be the opportunity of Ethereum. So digital gold is Bitcoin. And so in that world, we believe Ethereum could flip Bitcoin, similar to how Wall Street and equities flipped gold post 71. Now, that is just our working theory because I am still a Bitcoin bull. So I'm very bullish on Bitcoin, and I believe your targets for Bitcoin are actually reachable. So we think Bitcoin fair value should at least be 1.5 to 2.1 million, but we can see higher values. But that would, of course, provide upside to a neutral smart contract platform where a lot of Wall Street will innovate of real world assets.
One of the thoughts here is, Ethereum went from proof of work to proof of stake. Now, in the next 5 years, we just think about all of the creativity that is going to evolve in the financial markets around Ethereum. We totally agree with you on that. But there will come a time where we're in some kind of crisis, and then we see that the benefits of proof of work relative to proof of stake, because you're bringing in, as you say, you are bringing in a lot of TradFi and a TradFi thinking into the Ethereum world. So just wondering, if a crisis will be a moment of self-reflection and all right, is there a real difference between this proof of work world and this proof of stake world?
Yes, there is existential questions that'll emerge on proof of stake, but it's also, I think, going to happen with proof of work, because we know Bitcoin mining, for instance, is becoming concentrated in corporate. In fact, I think this year there was one mining operation that actually had won 6 successive block rewards, which is a high level of concentration. And as you know, as we get closer to 2140, the block reward is going to be so small that it may not provide the economic incentives to actually continue mining, which would represent greater concentration.
Tom Lee still considers Bitcoin as digital gold, but views Ethereum as the engine of the new financial world. Just as equities once overtook gold in importance, he believes 2025 marks the beginning of a similar shift, with Wall Street building its digital infrastructure on Ethereum. Stablecoins have already proven that blockchain networks can support trillions in daily transactions. Despite concerns over staking participation, Ethereum's flawless uptime and rapid institutional adoption demonstrate that it's ready to handle the massive scale of global finance.
I think that there is a lot of there to Ethereum being the base where Wall Street is going to build a lot of the future. As you know, corporate chains are always going to be viewed as fat fingers, someone's fat finger on the scale. And that's just how Wall Street operates anyways. You know, if some bank created a layer one blockchain and they're the oracle, we know that they're tilting that in their favor. And of course, the second is that all blockchains are basically databases, and the security model becomes a question because it's either a centralized chain, which isn't really a blockchain, or it's got a security model that can be exploited. And we know there's so many high profile hacks that have taken place. And uptime is a third dimension because, as you know, that is one of the prominent features of Ethereum, that its entire history, resilience was an existing feature and it's never had any downtime. And I think that that's important when we're thinking about a world of high speed transactions in a 24/7 world. I think a lot of creativity needs to take place on layer ones. And, you know, I mean, to me, as we think about tokenized world and using prediction markets, a lot of that thinking is taking place around building on layer ones and layer twos on Ethereum. But a broader statement I'd make is I don't think one blockchain can hold the entire financial system anyways, because let's say your 27 trillion is correct, and I believe it is even conservative, because today global GDP is 80 trillion. And we know GDP is an imperfect measurement because it only measures final sales. So let's say it measures 120 trillion of gross activity is what 80 trillion is measuring. Financial system ledger is 120 trillion on the other side of that. If just half moves onto the blockchain of the financial transaction, that's a 60 trillion market. Plus we know that as you tokenize loyalty and IP, things that are GDP measurements but not financial markets, that's also on the blockchain. So maybe the total, what ends up on the blockchain is 60 plus 20, 80 trillion market versus your 27 trillion. That cannot fit on one ledger. And then there's a third element, which I know you guys talk about, which is, as we try to offset wage loss from AI, we will want to have a record of taxing agentic activities to replace that lost revenue. And that's a huge accounting system that is really working on public chains. And so, so 27 trillion seems very reasonable, I mean, maybe low. Stats fundamentally trade off the value underlying. And so moving it to 24/7 is just a convenience transaction. It's not transformational because it doesn't unlock anything new. But tokenizing an NVIDIA or a Tesla is very appealing. Cathie and I have talked about this in the past, that the real value and the unlock of a tokenized NVIDIA is that we can do a factor bet. We can then see what's priced in for their Blackwell chip sales or their China sales, because now you take NVIDIA's price and you've broken it into tokenized components. And then you can use a prediction market to hedge yourself. So, Fed's replaced, or the Fed does a surprise hike. I can hedge a tokenized equity that way. The issuer has huge transparency. NVIDIA now knows what's priced in for its Blackwell chip sales, its China sales, and they can therefore work with a lot less, hey, what's priced in our stock? They know exactly what's priced in. So I think tokenized equities is a huge unlock, and it's useful for investors and for issuers. And of course, it moves us away from quarterly earnings too.
Yeah, it does. And do you think the administration, that part of the talk about changing quarterly earnings and so forth, might incorporate this sort of thinking?
I would say I wouldn't be surprised because, as you know, the administration has a lot of folks tied into Silicon Valley. And we know that the prediction markets were so useful in that election. They proved themselves. Polymarket got 50 out of 50 states right. So I would agree, because that's probably a better way to model earnings than to wait every 90 days for a company and have the CFO tied up for a month sitting in a room, auditing financial.
This is music to our ears. We're all about transparency, right?
Yeah, that's right. I think this would be a really important step in making markets a lot clearer for investors and understanding what they own. It makes it less black box. And so that's why I think tokenization is a huge deal.
No question about it. This is our big battle. It would help our strategy enormously because it would take the FUD, fear, uncertainty, and doubt. Really, a lot of that is caused by analysts, listening to the companies, they followed for years and years and years, who are saying, oh, off with their heads. That's our installed base. No way. And it would getting the betting markets involved and getting more people thinking about it, just thinking about it. That's all we need, would be a boon for efficiency of the market. The markets are highly inefficient right now, highly inefficient.
Yeah.
It's
basically, I 100% agree, because today the equilibrium of the stock price is like, we have to take everything that you guys just said and put it into a single unit of a price. But in a tokenized world, there's equilibrium for different components, and 100%, like a Tesla, an N equal 1 company, it's very difficult for the markets to price equilibrium because Elon Musk is changing dynamically the future, but we're now having to price it in and based on deliveries of units sold last quarter.
Well, and it's also time horizon as well. Yeah. Right now, the collapse in the time horizons to 1 quarter, if that, certainly in 22 and just generally because of benchmark sensitivity has really, I think, hurt capital allocation in a big, big way.
Yes.
And could hurt us competitively as a nation, especially now that China is, they're not hostage to the same kinds of constraints. So, this could be amazing.
Yeah, I would love to see the U.S. embrace this idea.
Can I just ask a question that was really plaguing Ethereum for a while until its recent very dramatic turn in price? And that was, it's the layer 2s that are collecting all the fees. The layer 1 is, really being disadvantaged. The network activity is falling, giving way to the layer 2s. So just to help people understand, I think it was a real question when Ether was falling relative to Bitcoin dramatically, and no one wanted to bet on it, even though these institutions were basically signing on to Ethereum. To me, it was such a big disconnect. But so now we have the term, but what about that issue?
Yeah, we have to think of Ethereum as the monetary base and the standard. So let's say I'm being really theoretical, in a quote world where the L2s pay 0 gas fees, to the L1, which is not true.
Mm-hmm.
The fact that Ethereum is the monetary base would actually accrue value to it. It's the same reason someone's saying, hey, look, we trade stock all day and it's quoted in dollars, but we don't pay the US dollar system to exist. We'd be
right.
The fact that NVIDIA trades in the US helps the dollar. So that's why even if there was no exchange between the two, it accrues value. But of course, we know that they're trying to fix that. And so L2s want to support L1s. And of course, in the future, any bank that is going to be building on the future of Ethereum is going to be staking Ethereum as well.
Yes. And I think the more layer 2s that evolve, the more important the underlying becomes, right?
I think that's right. I believe MicroStrategy will be one of the largest companies in America because of its Bitcoin holdings. So it's about 100 billion market cap today, 15 billion of debt, so 115. If Bitcoin goes to 2 million, then that's going to be a $2 trillion company. And it's because of its holding of Bitcoin, no different than an oil company. I think Ethereum can reach 60,000 per token in that world, and that would proportionally benefit the DATs because Ethereum's around 4,500 today, so a 15 times increase plus the NAV expansion. So there would be a lot of upside in the existing Ethereum treasury stocks in that world, and many would become multiple hundreds of billions of dollars of market cap.
Well, this sounds like an optimistic future.
Tom Lee projects that by 2030, the total crypto ecosystem could reach $27 trillion in value, with roughly $5 trillion in equity capital tied to digital asset treasury companies. In this scenario, he expects Ethereum to hit $60,000 per coin and Bitcoin to reach around $2 million, potentially turning firms like MicroStrategy into trillion-dollar giants purely through their crypto holdings. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.